All right. Good morning, everyone. Dan here from tradingology.com and the trading room for February 23rd, 2021. We are going to take a look at some market internals information today, seeing how the original spreadsheet gave us way to create some indicators to watch the same indicators in real time. This is the market timer spreadsheet from our great friends at Strong Market and Dave that joins us on a regular basis. So good morning, Dave.
Good morning, Dan. Good morning, everybody.
Yeah, we're going to take a look at that a little bit later. First, we'll just look at the recent news here and let people join in here. And I can tell you, I'll give you two guesses on who's on the microphone when things like this happen.
Oh, there it goes.
It might be your good friend, Jay. He's speaking right now.
Yeah, it's good to...
There you go, BD wins, ding, 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 ding. It is Jerome is on the mic right now testifying or speaking or whatever they call it. And it's across the board. Powell says inflation is still soft and they're committed to keep dumping the money in. Apparently they're still talking about the riots on CNN. Biden and the bill they're talking about, they still haven't got that next stimulus package passed. As we see on the calendar, we were warned that Fed Chair Powell is testifying. So he started about a half an hour or so ago. So it's still live if you care to join it after the trading room and our great breaking news and looking at the market timer spreadsheet. But that's exactly what we see here happen. The market was tanking leading into right when he took the stage. Look at this, 9 o'clock, right around shortly after, boom. He said, we're still going to keep using our tools that we have at our disposal. And the market definitely reacted, as well as on the major indexes. And this is where we're going to take a look today too. We'll have to watch for our good friend Terrence, because Terrence has got a question that we're going to directly respond to and I'll get answered for him here today. So how do you like the next microphone pulpit and the move? Buy the dip, right?
That's been the story for the last 10 years, so why not? At some point, though, I mean, the Fed really does have a lot of tools, which 99.9% of them is just this.
Right. Just to make you think that it's okay. If we take a bigger picture at it, or tech has just been selling off.
Tech has been the weakest, yeah.
It's 1,000 points. Look at this, 13,750, and we're down to 12,750 just in a couple days.
Yeah, tech has been definitely weak, and this morning, I mean, it was the biggest loser this morning. The Nasdaq futures were down over 200 points most of the morning.
Maybe I'll zoom in on that one and we'll take a look, because that's a rather interesting one to focus in on right now. That'll help Terrence if he catches the recording here, if he makes it live, whatever works. But that was definitely looking at the supply demand and the strength indicator. So what we should probably do first is just show where it all started for those that don't know yet. Right. And this is the market timer spreadsheet that Dave and his team at Market Timer and the Strong Market crew devised years of, I can't even, how many years ago did it start on paper and then turn to Excel?
1992.
So we're coming up on 30 years of building these algorithms, what this spreadsheet shows us. That's a scary way to think about it.
Yeah, it is scary.
But and here we have specifically the column that we want to talk about today is the MT supply and demand index. We see the range of -50 to +50, but we do see it does eclipse that at time, as well as over here on the strength of the trend, the ST. So ST and SD are the indicators that we're looking at the spreadsheet here. What this does is it takes a look at the closings of each day. So we punch in the numbers, or the numbers are input for the gains and the losses of the SPX and the Dow. So this is all based on the New York Stock Exchange. So originally created for the S&P. So there is obviously correlation to the Dow, but I have noticed even recently, like looking at the downturn we have here in the swing signal and the negativity that we're seeing, look at the SPY or the SPX. Every day has been negative.
Yep.
So that's a good thing to remember in case you guys have forgot that this is all based on the S&P. And that's correct. Right. You see that exactly right here.
Yeah, my original formula was on the S&P 500 changes each day.
So that's a good thing to remember. Like some people look at it and say, well, all this negativity and the Dow is going up. Well, that might be part of our manipulation being exposed, as well as then we had a big relative to the last few days down day. Obviously we can see $1,000 down days, which are probably in the future again, but just a matter of when. But yeah, there's a couple of 90, 60, 98 cents. It's always fun when it's less than $1 range. But those are what we're looking at there. So good, keep in mind that the S&P here, direct correlations, and we see it. And we are building to the negative again, in case you guys haven't seen those updates and been watching it yourself.
Now, the only column that does, well, there's several columns, but the one column that's in the center group of algorithms that you really want to pay attention to as far as the Dow goes is the price anomaly. Price anomaly is the only one that really is focused on the Dow.
Perfect. So we had a member asking about, he was watching the strength indicators and the supply demand indicators. He said, hey, this was positive, but price was going down. Can you help me understand that? So what he's looking at is, these are at the end of the day numbers. So we take the same algorithms that Dave put into the spreadsheet here, and they are translated into real-time toss indicators. So we see down at the bottom here is the SD, and I'm looking at the NQ right now for the NASDAQ. So he did create these for both the NASDAQ. So it works on both major indexes of the New York Stock Exchange and the NASDAQ exchange. And at the bottom is the strength of trend. So ST's here, SD's here. So just to keep it consistent, maybe I'll jump over to the SPX here. Since we are talking majorly, that is where it was devised from. Same thing applies to both indexes, but we'll just talk here. So I zoomed in, we have the bottom here. So today's a good example. Price is going down. So it was going down so far, it's off the thing. Negative 18. So we crossed that double digits. So that's one thing that we do look for is what do we say when it's over a 10 on either side, Dave?
That's institutional selling or buying, yeah.
So we're paying attention to that when it does cross those lines. But now we've seen it's retraced back and it's right around the -5 right now. So in comparison to where it was, yes, it is still negative. And maybe if you want to speak to the exact underlying algorithms of what it's measuring versus, incoming orders for the market. But go ahead.
The supply demand is simply a measurement of the difference between the inflows and the outflows on the cash index, and the inputs are the same as the spreadsheet. So you're talking about the advancing issues, declining issues, declining volume, and advancing volume. And what it does is it simply measures the amount of demand there is for stocks at any one time. So when you see that V shape down at the bottom there, it shows you on the supply demand, it shows you that there is in fact some demand coming in for stocks, and that's why we went higher. Now we're still negative. So that means that there's still more supply. When it's a negative number, there's more supply than demand. And when it's a positive number, there's more demand than supply. But the trend of that line is very, very important. So if it's trending higher, that's a positive sign overall for the short term. If you're trading the short term on a 10-minute, 5-minute chart or whatever. And if it's trending lower, like it did last week, I think at the point Terrence was asking about it was positive, but it was trending lower. So the demand became less and less. It was less and less demand for the stock over time. And then the strength basically is a momentum indicator for the S&D, so the supply and demand. So if the strength indicator is positive but trending lower, that means that there's less momentum in that trade. There's less and less people who are coming in and willing to buy or bid at that particular level. And so, you get a peak and it starts trending down. You want to take a look at that trend down. That is an indication that there's not much momentum behind this move, the previous move that was higher. So, even though the supply demand looked pretty steady, the momentum, the rate at which that demand was coming into the market started to decrease and decrease and decrease. And so it's exactly how I look at it.
So this is Friday that he was specifically asking the question on where the morning started and it was positive all day. but as Dave just said, it was trending down. And one
Right.
thing to keep in mind too, especially for Friday, is it's very low numbers. Like it was right at just barely above and just barely below a 1. So that's a very low number. You know, compare that to what's happening today suddenly. And you guys just saw it, you know, we're down at negative 30. So that's one thing to keep in mind is relative to where we are in the possibility of ranges. If we're less than 5, you know, less than 2 typically is on the boring days, I would call it, for this, the strength of the trend. And yeah, only a 5 on the SD too. So those are smaller numbers. So there's less action happening anyways. When we see how it was relatively flat on the S&P that day, I think it hit like 3,900 12 times. I think I saw someone take a note on. If you're trading 3,900, you were happy last week.
Yeah, anytime those are the supply demand number is under 10, that's pretty much retail. Just a little bit of buys and sells, nothing really major there. You expect more chop when it's below 5. But the trend on both is very important. So you want, if you're trading it short term, you want both of them going up. And let's see, or this way. I'm a mirror image here. And, when they're both negative like that, when you got supply demand negative and you got the straight negative, you don't want to take a long position. When they're both negative, that means that there is more supply than demand, and the strength is still negative, even though it's trending higher. You kind of want to wait and look at it as if you're going to trade at all, you would do a counter trend trade and probably go short.
So let us know if you guys got any other questions on that here. Looks like Terrence might have to catch the recording. We gave him a heads up and he said he was going to try and join, but that'll be fine. We'll get it to him, so he'll get his answer there. Always appreciate that insight. And just to look at the futures, the V continues. And just to add on to that he's mentioned the issues. You guys know we always watch the internals. This is a look at the raw internals, which goes into those indicators. And we see we are still almost negative 1,500. It just got above it slightly right now. The volume is kind of plateaued here to the downside, but it is still negative volume coming in. And we see that exposed here in the lines where they're pretty close. So that's more what we expect. So there could be more potential for a down move here, unless this continues up. It's all about the trend, right? Just because it's negative doesn't mean it's going to be a bunch of sellers and the market's going to drop like off a cliff. In relation to where we just were. Yeah, we almost hit negative 2,000, but there's more positive issues coming in. So it's relating to a rise in the numbers on a short-term basis.
Yeah, when the lines are really close together on the Excel, typically that indicates a true move. When they're really separated, that means the move's probably not going to last. But when they're tight together like that, it's pretty generally consistent that is in fact the trend. Now, if it drops below that, if it drops down below that 60% mark, then yeah, maybe you got a midday change of trend. But for the most part, when they're close together like that in the 70 range, yeah, that's a pretty good indication the trend's going to continue.
So all we need there then is who's got our internals on everyone's favorite, crypto. Ouch.
Yeah, so everybody says, oh, no, crypto's not related to stocks. It's not correlated. There's no relationship. Oh, yeah? Well, we saw crypto selling off pretty hard last night before stocks did. Actually, we were positive on the futures last night, on stock futures, but crypto started getting kind of knocked around. At one point, Bitcoin was down over $10,000, and we're still down. Yeah.
I particularly took note of Ethereum yesterday. I mean, this thing hit 2,000 a couple days ago.
Yeah.
And I could put a measurement on this. Watch this. We were down over 60%.
Wow.
In one day. That went from 2,000 to less than 800.
Yeah, that's a big move.
That's ridiculous.
Yeah. So, I mean, everybody who says there's no correlation now, they might say, oh, it's just coincidence. No, It happened in March of 2020. It's happening now. I've seen it happen. It does fluctuate differently than the stock market sometimes, but it's still a risk asset. If it's a risk asset, people are going to sell it off just like they do with stocks. And they're going to buy it just like they are with stocks. So if it's either risk on or risk off, it's a risk asset, no difference.
And I did notice, let me see if I can grab that chart. I didn't have it open yet, but it was an interesting potential correlation was, didn't gold jump yesterday?
It did. Both gold and silver were up yesterday. They're down today, and silver's down a little bit more than gold. But
so I was kind of curious to make a correlation if we were potentially moving from Bitcoin to gold for a little bit, and all the big, you see all the arguments between Schiff and the rest of the world. It's kind of comical. I think he was having a fun day yesterday. That's for sure.
yeah, I think so. There's I heard about. I didn't see it, but I heard a couple of comments about him, and he made a few comments. It was kind of interesting. And I did do a tweet about this guy who's on YouTube called Quoth the Raven on my Twitter account. He had some really interesting comments about both Tesla and Bitcoin today. I thought that were pretty good.
BD says check out ADA. I didn't see that one. Wow.
Yeah, ADA hit $1 something. I mean, it was roaring. Look at that. It dropped all the way down to below 20 cents.
Sub 20.
Oh, I didn't even see that one. Whew.
Literally where it was forever.
Yeah. That wiped out a bunch of traders. Holy cow.
Yeah, how many people that were taking out the margin loans and stuff and buying crypto on margin, how many got wiped out on this spike?
Oh, yeah.
And was that part of what the intention was, or was this a test?
Ooh.
You know, they say they're going to stress test the market, right? Maybe
Yeah,
this was
I mean, a lot of people lock up their crypto to earn that, and they figure if it goes up, they make money. But what they don't realize is that they're doing it on margin, or they're doing, they're borrowing against it. So if it drops below a certain point, they're going to liquidate your assets. You're not going to have it anymore.
Wow. Thanks for the call out on that one, BD. I didn't check that one out.
Yeah, I didn't see that one either. I don't follow ADA anymore, but I still follow XLM, Bitcoin, Ethereum. Vet got hit really hard. Boy, it was at 6 cents and it dropped down, I think, down to like 33, 0.03 cents rather.
Yeah, it was the fourth one I had on there. They had plenty of time. You called it, it's going to hit a nickel, and it overshot or up to 6 cents. So lots of time to sell your investments there if you needed to. A good week or so above 5 cents.
Yeah. Yeah, 5 cents is that, it's that number. It's the index. It's the, people pay attention to 5, 10, 15, 20, those kind of round numbers. And it always overshoots, especially when on crypto, because it's so thinly traded. And we got to 6, and that was it.
BD's staking. Good for you doing some research and doing some things. I like to hear it. And he's hanging on. So glad you didn't get taken out with that one. Well, it looks like I have to adjust my charts because we're going off the roof.
Yeah, going right back up here. I took a note of CHI this morning, which is kind of my bellwether for stocks. And it was down at one point close to 66 cents. That's the lowest I saw, which is a huge move. Wow. And one of the reasons why CHI is kind of a bellwether for me is that it's a convertible bond fund for mid-grade bonds. And it's very sensitive to the stock market because those convertible bonds can be exchanged for equity in the companies. And so when there's any kind of a downturn, it becomes real sensitive. I'm going to be very interested to see how that closes today. It was down below $14. And I think the lowest I saw it was down about 66 cents. See, if you go down a 5-minute chart, let's take a look at a short-term chart and see exactly where it hit. Yeah, wow, below 1370.
There was a small gap way back here that got filled.
Yeah. But yeah, when I saw that thing sell off this morning, I said, "Oh, this is not good." So keep an eye on that. It is a bellwether. It tells me it's a barometer, really. I mean, it's something you could put on the wall and just say, "Hey, look, if it's going down, stocks are probably going to get killed."
Yeah, it's like the needle going to stormy or fair weather.
Yep.
My parents had that one on the clock all the time. I used to tap on it, drive my mom crazy.
So we got a little bit of a rebound, but I don't know. Doesn't look like it's on very much volume there.
Yeah, just the big spike in the open. The VIX shot up and the VIX is retracing because Jay Powell settled everybody back down. We'll see.
Powell pump.
Yeah, I'm looking for that meme where he's, you're going to see it again today. If you guys haven't seen the memes where they got Powell yelling at the market, they're going to do it right here.
We'll see how many tools he has in the toolbox for real. He doesn't have really any at all. Everything, here's the interesting part is if the Fed, people say end the Fed, but if they end the Fed, there's nobody to buy our bonds. Even China doesn't want them anymore, and they've been selling some of them. So if they want to, China could probably totally crash our economy by just dumping all the bonds they have. And they have about $800 billion worth.
And it's been that way for a good amount of time, right? It's just getting worse and worse and higher.
Yeah, they had $1 trillion at one time. They did sell 200 billion last year. They've got 800 billion left. But boy, it's that's a tenuous situation. They're not going to be buying anymore. That's for sure, because the interest rates in China are higher than they are here. Why would they buy our bonds at zero? Well, we have gone up on the 30-year, but that's the inflation story, right? So the Federal Reserve is allowing interest rates to rise on the long end, the 10-year and the 30, to validate their inflation scenario. But if we get a real sharp drop in the stock market, guess what they're going to do? They're going to start buying the entire yield curve again, and interest rates will go lower.
Look at the 1 year, 1 day chart here. It almost hit zero.
Ooh.
And so what we got here is 1 year, 3 year. This moved on me apparently. Oh yeah, this is the 10-year. No, this is right. So it's 1, 3, 10, 30. So the long end actually got almost above 2.2. But they're coming back down. So yeah, I haven't seen that spike down there. I don't think ever.
Wow. Yeah.
That's
That's all the money market funds in those short terms. Remember what happened to the money market funds back in 2008, 2009? They were, they're supposed to be at always at par value, $1. They actually went negative.
Yeah, the flamethrower got turned on.
That was panic. That was a panic. So we'll see. That 30-year is definitely moving up. No justification for it, really. None.
That's what everyone keeps talking about is the yield curve, right? And as long as these keep going higher on the long end, which is basically what that is, right? 10, 20, 30 years, the long end of it, these are going higher and these aren't moving. So it's widening.
Or declining a little bit, yeah.
These are still declining.
Yeah.
There's nowhere left to decline. What are they going to do when it gets right here? That's literally a brick wall for us right now. We don't have negative yet. Maybe. Will we ever? I don't know.
Hey, we never thought we'd have negative oil either.
True. I'm going to pay you to take my oil. Thank you, sir.
Yeah. On the deflation front, we'll talk about this a little bit on Thursday in the Wealth Masterclass. But there's two huge, just massive trends here that are pointing to more and more deflation. And that is in, number one, commodity prices are basically being driven by the cost of containers. And the second thing is that rents in all the major cities in the country. You talk about New York City, Washington, LA, Dallas, all the major cities, rents are dropping like a rock. I have a condo down in Washington that I've been trying to rent now for about 4 months. Pre-pandemic, that condo would have rented for $2,500 a month. I just lowered it yesterday to $1,750.
Wow.
And I still can't find anybody to rent it. They have 17,000 listed rental units in New York City that have gone unrented now for about 4.5 months. They can't find, the rents have dropped 40%. In LA, rents are dropping like a rock. This is something that I have not heard a lot of people talk about. That's very deflationary.
And that's very troublesome for anybody that's in that situation and owes the mortgage, right? And if they're not, I don't know how much they're giving forbearance or forgiveness to not primary residence holders, right? Hey, if this is your investment property, you need to pay. I'm not sure what's going on there, whether you have any insight or not, but I think that would be an interesting one. That's where you're going to see a lot of these places go on the market, and that could bring a flood of houses for sale. I know it's a low inventory last I saw. I mean, prices around here in our neighborhood are just through the roof. I mean, valuations are higher than they've ever been for our houses.
Yeah, housing prices are going up, rents are going down. Everybody wants their own space now because of the pandemic. I don't know how long it's going to last. I mean, we are getting the vaccines out there now, but so we got a bubble in housing prices, and we got deflationary rent scenario. So I wouldn't suggest anyone buy any type of rental property or investment in real estate. Not personal financial advice, because I don't know your situation. However, if it was me, I'm not buying any more rental properties, that's for sure. I don't want to have 3 or 4 rental properties sitting on the market for 5 months unrented.
Right, just burning cash.
Yeah.
And you mentioned the Wealth Masterclass. Just a reminder for you guys, it is this Thursday, 1:00 Eastern. If you're a member, make sure the Zoom information is available in the members area for the Wealth Masterclass members. So we posted that last night. And if you are not a member, you do now have the ability, if you want to get on the monthly updates, Dave has made available through what we're calling the monthly Wealth Masterclass updates. You can get that without the core class for a subscription of $100 a month. So I dropped a link in there if you guys want to join that, and you can't get the full course yet. That is available in a path. If you want to upgrade to the full course later, you would then not have to pay the monthly subscription for the monthly meetings. So a couple of options for you guys. I think you guys might both be already in there, so we will see you on Thursday, but just want to remind everybody about that it is coming in 2 days.
Yep. Yeah, and it's going to be a big one because I'm going to go over my entire portfolio that is planned ahead of time for both a deflationary scenario and an inflationary scenario. And I'm going to provide you with the details on my entire portfolio.
Fantastic. So this one, yeah, don't miss it. I got a good inkling what's part of it, but Dave always pulls out some magic tricks out of the hat at the end of the day. So I'm sure he's got a few surprises for me too.
Yep, it'll be fun.
All right, with that, guys, we'll see you back on Thursday for both the trading room and those that are in the Wealth Masterclass. We'll see you then. As always, Dave, thank you for your time, and thanks for coming out, BD, Kyle. You guys are good to see. Appreciate it.
Absolutely. Thanks, guys. Appreciate it. Have a great day, Dan.
Bye-bye.